Hello and welcome to the Wendell Effect. This is Brandon Wendell back with you again this week. Unfortunately, no camera again, but we'll go over lots of charts for you to keep you active and see what's going on in the markets for this week. It's been quite active as last week as well. Anyway, just keep in mind that we're not broker-dealers or investment advisors. We're looking at this information from an educational standpoint only, not telling you to buy, sell, or hold any particular securities. Past performance is no indication of future results, and we're not subject to trading restrictions, so we could have a position in a security or initiate one at any time. You can always stay in touch with me. It's actually brandonwendell.cmt@gmail.com. That's the easiest way to get a hold of me. Just email me there if you got any questions or things you'd like to see here. You can also catch me on Twitter at TraderBDub, and you can search for us on YouTube, obviously. You probably found us there. And it's the Wendell Effect. So, that being said, we're going to jump into this week's market analysis with the equity index futures. Then we will go to the energy markets as usual, jumping over to sector analysis for the stock market, and finishing up with the Indian markets. So before we get started, we're going to jump in on, as we get started, really, the equity index futures for the week of September 25th. On the ES, we kind of figured there might be some bearishness this week, and sure enough there was. We tried to make a new high, but it collapsed to a fresh low, of course. And you can see that neither of these highs got us above 40 or 60 on the RSI, so very bearish. And we're making lower highs, lower lows. We're in an overall downtrend still. We've kind of resumed that. We should be making some fresh lows coming up pretty soon. We've hit our first target on the extensions here. It looks like we're going to head down towards our second, possibly. May not hit it this week, but if we have another week like we had last week, we will. Maybe even exceed it. Looking at the daily chart, you can see that we got some smaller intermediate targets along the way as we start accelerating to the downside. I'm sorry, this is still a weekly chart, isn't it? That was the week before. This is where we ended up this week. Sorry. See, I was right. It did drop more. So we followed up the past week, with that other more selling pressure and actually exceeded those targets. So what I was going to say is we have new targets down here, 3608 and 3453. I forgot I put in both weekly charts there from last week and then this week. So you see we did hit that target. Anyway, we've got on the daily chart some demand zones going all the way back to 2020. I mean, there's daily and 240 demand zones back there. And that's the only other thing that we've got as far as where we're going to stop on this move to the downside. So it could get pretty bearish before it gets much better. Better be expecting a little more shorting opportunities. We probably will get a little bit of relief rally after so much of a sell-off, but it may not happen until we hit those demand zones first. Let's take a look and see where those, on the 4 hour here, you can see it pretty cleanly. This is also a supply zone just below 3,800, so if we do bounce at all, that may be where we stall and get another new short to initiate to the downside at 3,581, and then, of course, other demand below that. Last week we saw that the leader was the Nasdaq by far, but since then, the Russell has caught up. You can see the Russell was lagging a little bit last week, and there it is, caught up, and it's actually taken over. Since the 12th of September, we've experienced 11.5% drawdown in that index, a little over 11.25 on the Nasdaq, so very bearish, obviously. And looking at the Nasdaq, you can see that this one did move down this week to our first target at the 0.618 extension of the previous impulse. And like I said, we might get a small stalling or a little bounce here, but other than that, we should be able to continue down to the 96.21. That's the next stalling point. But you did see a little bit of buying pressure as we came off that target. So we go down to the daily chart, and one of the reasons why is we're retesting an old demand zone. This is a demand zone going back about a year or so at 11,265. We tested it for the June lows, and obviously right now we did not make a new low. We didn't beat out those June lows yet. We'll see if we will on the Nasdaq, but the next demand that's fresh is the next Fibonacci extension. So we actually came down to this 100%, and then maybe we get to the 1.272, which is lining up with that demand zone I mentioned. On the 4 hour time frame, if we do rally, there is a little bit of overhead supply at 12,200, that area. Set us up for a nice shorting opportunity. There might be something here too. You notice the origin of that selling pressure right around 11,575, 11,600. So if we do start to bounce a little bit, look for those areas as possible stalling to continue downwards towards these targets. And the first one is 10,933 and then 10,621. On the Dow, not really much going on here. We did extend down, and on the weekly chart hit our 100% duplication target of the previous impulse. you can see that we really don't have much demand for quite some time, down the 24,000 range, maybe even lower. So we can get pretty ugly on this chart, but it's holding up a little bit better than the other indexes. On the continuous daily chart, going back, you can see that we have a tested demand zone at 26,414, and then those Fibonacci extensions come up right inside of another one at 24,545, but we're probably going to have a little bounce here as we just, as I mentioned, completed the 100% duplication of the preceding impulse. Usually get a little bounce there before we continue lower. Looking at the 4-hour chart, an opportunity, if we do bounce, there may be a good selling right here about 30,123 to 30,500. You got a nice supply zone there that could send us back down. So that would be the entry point for another swing short if you take some profits before it bounces. Looking at the Russell, this has now become one of our leaders in the markets to the downside. It also did not break the June lows. It came close but couldn't do it. The demand zone is a little bit stronger here because we barely tested it, so kind of holding off, and we are actually down below 40 on the RSI, so there definitely is enough bearish pressure to get through that demand, but we may get a little bounce first. So this week, if you see the Russell jump down to that 1636 area, watch for a little bounce at that point. As far as weekly supply, I mean, now you got this basing in the origin of the selling pressure at 1800. But on the daily chart, there's actually a little bit more, so a little more detail. Obviously, we can go down below that 1600. Inside of this, 1520 to 1636, you've got a couple of, well, at least just one demand from 2020 on the daily chart. And we got a little bit of supply, as I mentioned, right here at 1800. There'd be a great shorting opportunity if we retest that supply zone. So that's what I'll be looking for. Since this is a leader to the downside, might be setting up for a better shorting opportunity. And going on the 4-hour chart, let me see. That is at 1800 and a little lower than that. If we can't get up to the 1800 level, we do have a 4-hour zone at 1729.3 to 1740.1. That could set us up for a nice short, with the target being 1619.1 on the 4-hour time frame. So that one I'm kind of looking forward to for a possible shorting opportunity. Since it is the weakest out of the 4 equity indexes, it'll be the leader to the downside. Better to short the leader. Going on to the energy markets for the week of September 25th, we start off with crude oil just kind of hovering around that weekly demand zone and can't seem to get below 40, so just kind of dying off in momentum, not really moving down, not moving up, just back and forth a little bit. It's good for intraday trades, not so good for the swing. So looking at the daily chart, we are still in a downtrend. We're not as strong in the downtrend as we were before. We just didn't finish off the week with a new low, as you can see. So we had that little bounce and still can't make new highs, but we're not making a new low, so it might indicate a little bit of sideways movement this week. On the 4-hour chart, you can kind of see we're stuck at this demand zone, testing it again with less momentum. That's suggesting we get bounced between these zones a little bit this week. We'll eventually break out, and we should break to the downside, but it might take a few tests before it happens. So you might want to look somewhere else or only day trade crude oil rather than a swing trade setup yet. Looking at crude oil historically, over the last 15 years, this has pretty much gone 50-50. So it's kind of what I was saying, historically it hasn't really gone anywhere. The average return is almost nothing for the week. Actually, not even the week, the month. So that's for the whole month. So might want to look elsewhere for some good trades. On nat gas, we are completing our double top formation and breaking down towards that target of 5.2. It called I think it was a couple weeks ago, it talked about that, breaking the neckline down. And on the smaller time frame, it was actually head and shoulders last week that we were looking at. So hopefully you took advantage of that. Remember I said I wait for the close below and I trade the retest of the neckline. Well, there it was. There's the retest of the neckline. If you had a big enough stop loss or you took an opportunity as it came back up and went back down, it's sitting pretty. We hit our first extension and it doesn't look like anything's going to stop from us getting to that measured move, really, the 5.729 to the 5.620. So it looks like we're going to see more selling pressure on nat gas this week. Watch for that. Sorry, the dogs going nuts again. They always seem to do that at the right time, don't they? Anyway, here you can see on the 4-hour chart, really nothing different. There's a little bit of supply that we might be able to short just above 7, and also another little pocket right here at about 7.75. So keep an eye out for that. If we do bounce at all, for new shorting opportunities, and maybe some little stalling on the way down at 6.5 and then 6.2 as well. Looking at the last 15 years, overall bearish, not huge. It's about 67% to the downside, only 33% to the upside over the last 15 years. So the average return has been a drop of about 3.5% for this month. So keep an eye out for that. That's kind of leaning in towards our formation that we've been talking about and looking to short. On the weekly chart of gasoline, we are still working our way down very slowly, kind of stalled out, but trying to work towards that 204. On the daily chart, if we bounce, we might get a false breakout of the sideways movement up to 265 in order to be able to short again. And we're just kind of stuck a little sideways. And when you get to the smaller time frames, you see it. So I'm looking at a shorting opportunity at 265, target 1, 227, target 2, 204, the weekly demand. It'll take a while, though, because, again, you can see we're just binging, bing, 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 back and forth on that gasoline between those 4-hour zones. So we got to break out, and I think it'll be a false breakout to the upside before we slam down. Overall, it's been pretty flat. In the last 15 years, not really a whole lot of movement in either direction. The return's been kind of dismal, so might be okay with trading the 4-hour zones back and forth until something happens. And then finally, heating oil, also looking at a double top on the weekly chart, as you can see, getting ready to break the neckline. So we got an opportunity potentially here to catch it before it goes. There is a little bit of demand here in that 3 area, the whole number, so keep an eye out for that. Looking at the smaller time frame, that neckline, you can see we break that at 311, but we might bounce at 301. So I'm waiting for a close below that on the weekly basis and a retest of this 311 before I take a short. And it may overshoot it a little bit, so you got to give it some wiggle room. Maybe enter after, again, on the weekly when it breaks down. It's not going to be this week, right? Because we need to close below that neckline on the weekly chart, then a retest of it before we short. So we got at least 2 to 3 weeks before we start on this. But on a smaller time frame, it does look like it's going to push down more this week. Finished off very bearish on Friday after we climbed all week. So I would expect maybe something similar where we try to weekly, start to push up early in the week and drop at the end of the week. So you can see we tested a supply zone twice and couldn't make a new low, but we did get below 40. So there's definitely bearish pressure there. Anything, if we do move, there's a little supply zone right here that looks pretty good about, I don't know, was that 3.55? So keep an eye out on that. Anyway, that's what we got for the energy markets. We're going to roll over now to the stock market analysis and take a look at the sectors. Okay, so starting off with the sectors, you can see we're still in the bearish kind of a flight to safety type mode where you're seeing the energy, staples, healthcare, and utilities performing a little bit better than the other sectors, but all still going down, except for utilities this week. Well, sorry, this is the last 6 months. This past week, everything is down. So as you can see, the best performer has been staples, which is a flight to safety, as I said. So pretty much this is what the week looked like. The only thing that was green was over here in packaged goods. I guess it is Kellogg's and General Mills and Schmuckers. So a lot of food stuff, Hormel, Hershey. So can't go wrong with booze and food, basically, is what it comes down to when the markets start crashing like that. So everything was, and I guess the drugs too. Yeah, Eli Lilly doing pretty well there too. That's about it, though. So moving on to the different ETFs, you can see the XLY consumer discretionary actually hit our target to the downside, that 100% duplication of the previous impulse. We should get a bounce here. That's a pretty bullish candle, but I wouldn't expect a big bounce. If anything, the most it would get is probably right here to 50%, where you see the selling pressure coming back in. But look for it to stall out maybe at 150, as that is about a 23% retracement before we head down to our demand zone here at 142. Was this bookingholdings.com? Last week we looked at this as a trade opportunity, and you can see it had gone in for the entry, gave you a second chance if you missed the first one, and this week it's already past target 1, well on its way to target 2, so hopefully got a piece of that and was able to trade it to the downside. And if we do bounce at all, this is going to be a really nice supply zone at 1900 again. So look for that if we do get any kind of a bounce to be able to short at that 1900 supply, maybe even lower, like 1870, right about there. McDonald's was another one that we were looking at, and it came into our entry point, has pushed down a bit. So we ended up hitting our first target and second target. It's made all its way down to that 100% duplication. So hopefully you were able to capture that move as well that I predicted on the previous trades. XLC, the communication sector, is pushed down through both of the supply zones. Oh, actually, I'm sorry. There was just one demand zone. My bad. Pushed through our demand zone, made it to the next Fibonacci extension here, 161.8. Might get a little bounce here, and if we do, I'm looking for another short opportunity on this sector at 51.57. So if we do get a bounce early in the week, look to sell off if we hit that 51.57 to 52.35 is a good short. The XLK technology sector also overshot the 100% extension, and if we do bounce, well, this was our previous retracement, so obviously not going to use that, but if we do bounce here a little bit, I would actually look for a bounce only to about this 127 area before it drops lower, ultimately hitting that 114. The industrials also hit its Fibonacci extension, and if we look at the candle, that's a bullish candle trying to bounce right now again. But we do have a supply zone here at 88.13 to 90.36, and you got a Fibonacci level right in the middle there at 88.54. Cintas, this was a shorting opportunity. I'm sorry, not a short, a long opportunity we were looking at, and it came down pretty much almost tagged the stop, had a positive divergence there, and unfortunately, as it went back up, it fell down, and when it fell down, you can see the RSI broke 40, and that was kind of the sign too. When it breaks 40, demand will not stand. So ended up getting right through that area. So stopped you out if you got it. It's unfortunate. Building materials, this is another XLB. This might take a little bounce. You got a very bullish hammer type candle right there. Lots of bullish pressure. Could bounce up to 71.75, the 38% retracement before it heads back lower. You want to put your stop above 73, which is the top of that zone. So looking for that as another nice short to carry us lower, possibly even below 66. I don't really have a target on this one yet. I'll have to look at that if we start getting into this and watching it drop. XLE, the energy, finally broke that trend line. Remember, we were worried about that inflation and trend, but I mentioned that we never got above 60 on the RSI last week, or 2 weeks ago. 2 weeks ago, I mentioned that it's probably going to break because we couldn't get those highs above 60, and sure enough, we did. Now we're below 40. Bear market is intact with that big gap down. We should be able to hit this target this week, 69.38. If we do get in kind of a bounce, this is going to be maybe a gap closure before we go lower again. But this trend, that uptrend is over. We're going to be heading down now. Consumer staples started falling off, not as fast as the other markets. Again, they had a little bit more bullishness than the others, but still bearish for the week. And you can see that at the end of the week, we tried to push up just a little bit. This candle is not as bullish as I saw the other sectors. So if we get a retracement, it might be a weak retracement, only 23.6 or 38.2. I don't see a whole lot going on in this sector. By the way, when I tell people and talk about the sector rotation and the consumer staples kind of becoming in vogue, it doesn't necessarily mean they're going to go up. They just don't go down as much as some of the other markets. So they're a flight to safety where people don't have as big of a loss if they had stayed in the consumer discretionary. So don't think that means to go out and start buying those consumer staples thinking you're going to be okay, or utilities and thinking you're going to be okay. No, that market's still dropping too. It just doesn't suck as bad. Let's put it that way. But they still all suck. So you're better off really looking for the bounce and then playing the short side longer term. XLV on the healthcare side, again, we got a positive divergence. We might get a little bounce here. This could be a small, short, bullish play up to the supply at 127, maybe the 61.8 retracement inside of it. That's probably my entry for another new short, but this may be where the flight to safety goes for a little bit when we get some relief rally here, just a short relief rally this week possibly, before we continue lower. Again, we're in a bear market. It's going to continue for a bit. XLU, same thing. We got a possible bouncing going on off demand. I didn't mark it off, but this was a neckline for our double top, which actually almost hit the target. Didn't quite because the demand was in the way. But if we bounce and retest that neckline again, which now kind of became a little supply zone there, I would expect us to drop and eventually hit the 69.43 demand, the next fresh level. But it's going to bounce a little bit first this week before it goes lower for the utilities. Dominion was a short opportunity I was looking at. Unfortunately, never went to the entry, ended up hitting the target, so we got to abandon that trade. It's not worth it. It's not going to come all the way back up. The financials, XLF, also exceeded the target, initial target, which is the 100% duplication of the prior impulse. This impulse down, retracement, continuation. So we may end up going to the 161.8, which is also turns out to be a demand zone as well. And this was, again, we saw this was going to happen over the past couple of weeks because we couldn't get above 60 on the RSI. So we should get a bit of a rally here. The financials might actually rally a little this week if we break the high of this candle of 31.33, but it'll run smack into that selling pressure around 33. So that's your target, and not only a target, but that might be a good shorting opportunity around 33 to target that $29 demand. So I'm looking for small rally up to supply, which I forgot to draw in, and then the drop down to that demand zone. So play that how you will. And then finally, we got the real estate sector. Pretty much same story here. Looks like a relief rally's coming. We got that bullish candle. If we break the high of that candle Friday, basically we could rally up a little bit. We got some Fibonacci levels, and I think this is from a 4-hour zone that I was looking at a trade opportunity there, right around 61.8, and there's also supply on the smaller time frame. You know what? I don't have it here, so let me go check real quick. We go into XLRE, and I'm on the 4-hour, and yes, it is right there. Drop, base, and drop. And got a little bit right here too, actually, right around 38.35 to 39.41. You got drop, base, drop too. So watch for one of those two to be where we stall out on this little relief rally. Again, we just need to break the highs of either the 4-hour candle at 37.48, or if you wanted to really be more comfortable with it, wait for it to break the daily candle. Sorry. Wrong keystroke there. The top of the daily candle would actually be 37.75, and then you could possibly let it go up. It's a counter trend play if you try to buy long, but there's an opportunity there, and then you end up shorting at the 38.35 to continue down. Oops. So let me get back over to my slides there. There we go. And we'll do a little follow-up on previous trades. So, from last week's trades, we had KMX on the 4-hour chart, which actually, unfortunately, hit both of our targets without hitting the entry, so no trade on that one, obviously, and that's disappointing. AMAT actually did hit our targets, as you can see. It did get in, so hopefully you were able to trigger the entry a couple weeks ago, and then finally, we're on our way to target 2, but watch out for a little pullback. There may also be a re-entry here, as this is really a rally, base, drop supply zone there. So you possibly could see this as a retest around that $88 for another entry, and then target 81 basically the next target. What is this? Fidelity National Services also ended up hitting all of its targets, so it should be out of that one by now. Basically hit target 1, 2, and 3 after that supply zone was tagged. Molson also is done because it hit target 2 finally. So last week we almost hit target 1. This week we hit them both. Or sorry, last week we hit them both actually, but before we talked about it. Anyway, you get the idea. It won. So that is it for the U.S. stock market. I'm going to move over to India now and taking a look at the Indian markets for the week of September 25th. Well, they were pretty bearish this past week, although we did have a little bit of green over here in consumer non-durables and consumer durables, which is actually a bit of a flight to safety. So definitely seeing a little bit of weakness there in the markets. The Nifty for this week, roughly, you can see it actually rises historically. Over the last 15 years, 60% of the time it's gone up, but not much. So I wouldn't expect a whole lot out of this market in either direction. You notice last week we talked about this divergence on the Nifty, and sure enough, this week it collapsed. It broke back below that neckline again because it just, can't go up without momentum. So it doesn't look like we're going to go down much or up much. Honestly, I think we could ride a little sideways this week. Looking at the daily chart, you're starting to see a little bit of sideways congestion between 17,250 and 18,000. Overall, I still think we're a bit bearish, and the fact that Tuesday of last week, you see that high is not above 60, that's actually bearish. And we got a little bit of a rush at the end of the day, or end of the week on Friday. Typically, when you get those large candles after a move down, you get a bounce. So I would not be surprised to bounce up, maybe even hit this trend line right around 17,600 before we go lower. Or, again, we could just go sideways a little bit this week. But overall, there's definitely still a bearish trend going on. So I think that we could push down. If we do rally, this looks like a good 4-hour zone, 17,600. It's starting to form a zone, really. It's drop, base, and drop. So that 17,600 could be where we rally to before we drop again. And the target is demand at 16.9 right here. On Reliance, they're not going to help. Reliance is bearish. It's still just going down. You can see we're head and shoulders. We've made it almost to the target, about halfway to the target. We got lots of bearish activity here. Can't get above 60 on the rallies. It's going down. So wouldn't be surprised to bounce at the 23.75. Maybe Tuesday. Might happen Monday or Tuesday. It might take a couple days to get there, but it's falling down pretty quick. But if it does bounce there, it's going to be a small bounce. Nothing really you want to go long on. TCS is getting ready to retrace potentially a little bit more. We've just impulsed down. You see we slowed down on the move, and we got a divergence here. So we might get a small rally, but it may only be to 30.47 or 30.90 before we go ultimately down to 29.22. So again, on TCS, might get a little bit of rally here, but ultimately moving down as well to 29.22. Pretty bearish, but we did slow down a little. ICICI Bank has had a little bit of a pullback. We'll have to see if we get bounced from here. It's retraced 61.8%, which is pretty bearish, but we didn't go below 40. So with TCS, there might be a little relief rally back up. It'll be interesting to see. This will be the test right here at about 900. No, sorry, that's about 910, 911. That'll be the little bit of selling pressure that might try to push us back down. So if we can get beyond that, then we would be able to make new highs. If not, then there'll just be a small bounce before we go lower. And then finally, Bajaj Financial Services we looked at last week. Actually, I was originally looking for a long here, but now this is turning into kind of a bearish trend, isn't it? We got lower high, almost a lower low. This could be the end of the uptrend, a double top that could take us back down. And if we draw on a neckline here, we need to break this and retest it from the underside before we could short. And then you'd be able to see a drop from roughly 1,700 down to 1,619. Finally, the Bank Nifty, we had the big topping tail. I said to expect some selling pressure last week, and sure enough, we got it this week. We got the new low. Lots of selling pressure still, so might still continue to go down a little bit more. But not expecting too much of a drop out of this. Maybe not another repeat of last week, but it could get pretty bad and take us all the way down to 38,000 again. But if it doesn't, if it's just kind of a mild sell-off, might start to see some slowing on the way down. You can see we retraced 61.8 of the last impulse, so it may continue to drift down to 38,777 for our next target, or we could get a bounce right here, but that bounce should only take us up to about 41,500 at the highest. And seeing the same thing on the 4-hour, this is a demand zone at the 61.8 inside the demand. Should be getting us a bounce. The only issue was we actually did go below 40. So normally when I see this formation, I expect pretty good of a bounce. But because we're below 40, we may only bounce up to this area, which is about 40,500, and that could be where we end up turning back down and making new lows. So keep an eye out for that for this week. If again we rally, the test point is going to be right there at 40,500. So that's it for the Wendell Effect for this week. Thank you for being here, and hopefully make sure if you did enjoy this video, that you hit like to let us know. You can always email me too at brandonwendell.cmt@gmail.com. And don't forget to subscribe, and I'll talk to you again soon. Until next week, trade safe, trade well, and take care.